Let's see if that's working. Is that working now? Yes, I can hear myself now. That looks like that is better than it was before. So, welcome everyone. Welcome to the Prop Trade. It's our final live event before Christmas. I'm taking tomorrow. It's Christmas Day, the 25th and 26th, Boxing Day here in the UK. I'm in my home office today. It's a lovely day out there. It's freezing cold. It's -1 degrees in the wind, but it's clear blue skies. I love winter days like this. So, as I say, I hope you are all well. Let me just share my screen. I'm quite with it today. Bear with me. Had a bit of a night out tonight. It was very funny, but anyway, let's have a look at that. So, lots of love to you, Katerina and Theo as well. Hope you have some time to yourselves and get some rest. So take care, everyone. Right, so last big news. Diary not to see only. Yo. Hello, my friend. Good morning, good afternoon, wherever you're on the world. Yo. Diary not to see only. It's an interesting handle, my friend. Hope you're well. I hope you're making money trading these markets. We've had a massive run against the dollar this year. I'm going to review, as I think I said yesterday, I'm going to review 2025 on Monday, and then we'll do a look ahead for what is in store for 2026. Perhaps more rate cuts, perhaps not as many as people think, perhaps more than people think. That's what makes a market as far as the central banks are concerned. Rate hikes, small rate hikes from the Bank of Japan, who knows? Bank of Australia, the RBA, who knows? Maybe not. ECB, maybe. Anyway, lots to digest. We've had a massive run against the dollar this year, and we'll just go through things as we see them. Stocks were up again yesterday. I've actually got, I wasn't planning to, but when the system triggers, and I say this every single year. These last 2 weeks of December can be some of the most profitable trading days, particularly for stocks, particularly for individual stocks, but particularly for indices as well, whether you were going long or you're going short. The infamous Santa rally looked like it was over, maybe back on, who knows? It's the last day today. It's half day trading today. The London market is closing. Some of the tail market is open. As I said to you on Monday, it's very, very quiet in the city on Monday. I drove through the city going to the airport, take my family away. Very, very quiet on Monday. Markets are open for a half day. The US is also open, but just for a half day. It's early closing. Check your system, check your trading platforms. We've sent notes out to everyone. You should have had emails about that, about when markets are closed, the restrictions, the amount of liquidity that's around, the potential volatility, the potential slippage. So just be aware, these are all risks to being in the market this time of the year. But as I say, I have actually 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah, I thought it was 12 trades in the market. Some of them are quite relatively small given that amount of exposure at this time of the year, given the liquidity that's around. But I have 12 active trades on my trading account live as we speak. Most of them actually in the money and doing really well. The biggest mover we had, I'm sure you're all aware, if anybody who follows me or listens to me blethering on, we were long let's go to the daily. We were long gold from the 10th of December closing out. We got filled at 4,227. And I didn't actually, somebody asked me yesterday, did you add to your position as this moved up? I didn't. That is I'm starting to do that on some of my positions. These end of day ones, there tends to still be a set and forget. So I'll put it on, set the target, set the stop loss. We get to target 1. We take 50% of the trade off. And again, I've looked at, taking 80% off, 75%. I'd just leave it 50-50 and then leave 50 on to run, see if the trend is going to maintain. And again, somebody asked me, why didn't you add here on the 22nd on Monday when it ramped really strongly? I was just pulling my stop loss up. I was getting quite active. Here you can see I probably got a bit too active pulling the stop loss up because I was around the screens too much. If I'd been away from the screens more, I sound really northern then, didn't it? Away. I probably would have left the stop loss further away, but I was pulling it up as the market was pulling up, and I got a little bit too aggressive in all honesty. And we got reversed into yesterday. Look at that. These are the sort of trades, guys, we have to accept as part and parcel of our business. Okay. It was only from, that was the hourly. This is the hourly candle, and it just spiked down. I thought it was relatively safe there. I was making the numbers up, really. There was no actual technique to why that stop loss went to 4,435. I lost a bit of discipline in the giddiness of the, I couldn't lose. It was moving higher. It had rejected 4,500 a couple of times. It looked somewhat inevitable. It didn't. Then it rejected it again, and then it had a big down candle here on the US Open yesterday. Then it moved further down after we were speaking yesterday, after I was speaking yesterday. So really, I should have been probably a bit more disciplined. But I say, these things, I wrote it all down, what happened, how I felt about it, because that's another key thing I do. Still write a manual journal. There's some really, really good automated ones these days, but I still write stuff longhand. And as you can see, big up candle, big down candle, big up candle, but it was too late. My stop loss had been hit. We were out of the trade, but we bagged, it was over $200 move, and that's, 2,000 pips if you're talking in points terms as far as gold. Huge move. And again, we were more disciplined as we were moving up. We were, with our stop loss, but with this one, the whole position was closed out yesterday, not just 50-50. So, and I didn't take any profit when it first moved up to this 4,350 level, which is an initial sort of target area, because we'd seen some strong candles. So anyway, gold is still ramping, and the big news overnight is obviously the key 4,500 level was breached late yesterday. And we got to a new all-time high here, 4,525. I'm going to put that in for posterity. So just put a little note on that so I don't forget. So on all-time high, 23rd of the 12th. What was it? 4,525. Love these round numbers. So there we go. There we are. We'll come back to that. If that gets taken out again over the next few days, lots going on. So massive positive end to the year. And again, I'll review what we did for 2025 on our end of day trades on Monday as well. We'll do it all up. So Yo, I don't know if you're still here. Oh, you're still, sorry, diary not to see. If you want anything to have a look at in particular, do let me know. So let's just pop back to the Forex market and the euro, which again, it was an end of day trade. We took long last night and we're back to entry. Basically, we were up. It's a 4-hour chart. I think we got filled here yesterday. We pushed higher, but I think it was about 30 pips first target there at 118.18. We got filled at 117.85.50. I think it was, or something like that. And our stop loss is just down here on the hourly chart, quite tight, 117.66 at the moment. So it's had a rally this morning. Doesn't want to hold 118 at the moment, and we're down at the moment. So we have in 2 minutes' time the final significant data point for this week ahead of Christmas. There's some data next week. We'll have a look at that next week when we come around. But it's the weekly unemployment claims. Remember, anything around this 220 to even up to 240 is still a relatively strong jobs market. There's been some significant, obviously, weakening of the jobs market. The non-farm payrolls is showing sort of some declines. We've had this mixed data yesterday around the GDP was out of the park at 4.3%. But there's some caveats within that. The prices were much higher as well, but that's a strong number, 4.3%. I'm surprised I didn't see more comments from the administration, the US administration yesterday about that strong GDP number yesterday. But that's an annualized. Remember, they do it on a quarterly basis, and then they annualize it. It's all a bit strange the way they do the stats, to be honest. And obviously, there's some question marks over it because of the government shutdown. But really, some of the detail in it still supported the strength of the US market. And again, it's about consumer resilience this year, really, and consumer confidence. Yeah, it dipped yesterday, but still around that 90 mark, 89.1. So it has dipped. People are obviously all feeling higher prices. in the goods in particular, but the service disinflation, charges for healthcare and energy and their accountants and their lawyers and what have you, that they seem to be ameliorating quite well. But manufacturing isn't, again, you can see here with Richmond, not as bad as last time and not as bad as expected, but still negative, still in a negative number. So what's been flying in the face of it all has been the unemployment claims. But again, these have been coming in every week. But again, obviously impacted by the government shutdown as well. So that's just about to drop. Let's leave it here. So again, strong number, 214,000. That's a significant drop again. Remember, we had that. Here's the thing. We had that significant drop here, which looked like the outlier a couple of weeks ago on the 4th of December. We're all the way down to 191,000, and then before we then reversed back to the 240 level or 235 level, near the 240 level, before we then came back to this 220 level last week. So 214,000 again on the weaker side. So this is still, remember what this is. This is people claiming unemployment for the first time. So this is initial claims, initial weekly claims. Obviously, there's more seasonal jobs around this time of year, but obviously those would have all been filled at the beginning of December of the Thanksgiving holiday. So people are filing for the first time, 214,000. So again, it's a relatively good sign of the resilience of the US market again, and a sort of a flying in the face of what the non-farm payroll's been telling us. However, as far as the whole jobs market is concerned, there's definitely, sort of, as we've been saying for a while, definitely showing signs of weakness in that market. But it's sort of petered out here towards the end of the year. So if we make this like the 4 weekly average for December, if that's we cancel that as an outlier, we cancel that as an outlier. The 235, the first week at 191, we're back around this 220 sort of 3-month average. You can see this 220 level here. So again, that's a strong jobs market historically for the US economy. But obviously the constituents of that market is changed quite significantly, and also the impacts of tariffs, the impacts of AI, the big stories over the last 2 or 3 years. Is it starting to feed through in the jobs market? We'll see as we move forward with the data. So that was quite a strong number. What's it done to the euro? Let's flick to the 5-minute time frame. So euro's been declining here from the breach of 118 this morning in European session, down, back to our entry at 1789 from last night, and we're back to it basically. We went as low as 1784. This was this morning on the European ops. So again, the breach of 118 pre-market, pre the cash market opening in Europe was sold off. We went to 117.80. Interestingly, it was from it's this morning as well. So hang on a minute. This is the 5-minute chart. Let's just tick that up a minute. Sorry, just bear with me a second. So remember the liquidity is down. So there we are. So there, bang, bang, bang on the hourly chart. Don't want to be over 118 today. A tight range. There's in fact the top was what did I say? It was 118.8. So we'll call it 10, and our low is 117.80. So 30 pip range. Not unusual for euro. So fine, I would probably stay in that range for the rest of the day unless I'm proved wrong, of course. But obviously, my reading of that is there's the first test of 118. An hour we were over it, and then 1, 2, 3. In fact, that one as well. Coming away from it. So 1, 2, 3, 4, 5, 6 hours today. Couldn't get over 118 in the Asian trades, the early European trades. I say lack of liquidity is probably added to that, and down we go again. So that big, obviously, psychological level we talked about last week is providing resistance this week as well. So down, but back up in the last hour, currently to 117.90, where we got into. We're absolutely flat on that end of day trade. from yesterday. So claims coming better. So let's just go through the other dollar crosses. The other skin in the game I have as far as the dollar is the Aussie. This is still half a position, and the CAD. So Aussie, in fact, well, I've got a position and a half now on the Aussie. I've got half a position from the 22nd, and then we've got a full position from last night. The half position hit initial target yesterday. We got 20 pips off that after a 40 pip move. So there's half of that still live. I don't know if you can see that very well. The stop loss, let's try and zoom this up. If we've got the 10-minute chart, you might see that. You can, there we are. So that's our entry here. This dotted orange line from last night. There's a stop loss from the entry we took on the 22nd. That's the initial target. That took our that was a 40 pip move. We took half it off, so we banked 20 pips. And so this is now guaranteeing me, if anything, it's guaranteed another 3 pips more, so another 23 pips if that reverses to that stop loss from the 22nd. The 23rd target was quite a long way, if I remember rightly. I haven't marked it on here. Why haven't I marked it on here? Oh, okay. Well, that's the Aussie. All right, so I haven't marked it, and I haven't put the stop loss on here either, have I? Anyway, let me tell you where the stop loss was. Stop loss on the Aussie was 60. It wasn't. It was 60. Oh, it was quite a long way, wasn't it? Yeah. So there's the entry from the 22nd. Why haven't I stop loss? I've not marked the stop loss from the 23rd on here. Can't have done. So the stop loss from the 23rd on my other platform here is at 66.35. I thought I'd put that on. No, not stop loss from the 23rd. Anyway, 66.35 is the stop loss from last night. No, I've marked it on here. There's the entry, and 66.35. Where? Oh, there it is. 66.35. It is down there. So that's a stop loss. Obviously, it's a 15-minute chart. This is the end of day chart. So big old stop loss there. Still, we'll be moving that later, possibly. We just got to the 4-hour. There we are. There's a stop loss here. Yeah, so that needs ramping up. In fact, let's do that now. I will move that to that level there. So stop loss 66.75, just below this wick from this morning or yesterday, halfway through this big positive candle on the 4-hour time frame. We're going to move that later. So Aussie, a position and a half. First one's in the money. Second one's looking okay as well. We're back to sort of where we got in. No, we're not. We're above where we got in now, aren't we? So, so we'll look at the hourly. There's our entry here, that dotted line. So we are still in the money on the second half of that one as well. So that was Euro flat Aussie in the money. Let's just go through all the other open trades because we've seen the data and reaction to the. Actually, let's just move. Sorry. Let me just go through the main dollar crosses first, then we'll look at my open trades. So the story of the week of dollar continues here. Dollar yen, except against the yen. The yen had a poor day again yesterday. Dollar was up back to the 156 level. And it's progressed over this week and the tail end of last week from this rally down to 155.60. A week or so ago. So the key thing or the interesting thing for me last night was the strength of yesterday's move, which took us into the upper half of the Bollinger Band again. But it's not a massive candle. It's just a breach. It's the 23rd of December as well. Caveat: how many big players are still around and are all on their Caribbean holidays or wherever they go, the Maldives or wherever they've gone to skiing somewhere. Some of them, no doubt. So it was significant the fact we broke into the upper half of the Bollinger Band, but see if it holds. Last time it was a weak break and it continued to decline. The dollar, even against the strengthening yen. There was chatter yesterday or the day before about the yen reaching intervention levels. And Ueda, the head of the Bank of Japan, has got a key speech. I think it's tomorrow or Monday. I think it's tomorrow, isn't it? Given that so Ueda has a key speech tomorrow. I don't know what time it's scheduled for. Speaking at the meeting of councils of Kinderman in Tokyo tomorrow. It's not actually. I haven't actually got a time for it. So if you're you are trading on the 25th, watch the yen and Udia's comments, the head of the Bank of Japan, tomorrow night. So anyway, as I was saying, the dollar's come back against the weakening yen again, and that's what the comments were yesterday about potential intervention. So see if we can hold this levels, but these levels we talked about last week are still in play. 56 at the bottom here, this pink zone, and 56.60 is the upper zone here. You can see that peak, and then obviously on an hourly basis, a bit lower than that, 56.40, top of the Bollinger Band there, and that last leg up we had before we drifted lower, then a significant leg down on those 2 days, and then drifted high, but with bigger candles than we've had on here. So maybe seeing, a flooring area here for dollar yen. But anyway, dollars up yesterday, and see if we can hold that into the close. The CAD was another one. We took a position off. We've taken half the position off. And there's our stop loss from the 20 seconds. Target was hit. There's our stop loss. Might pull that down a bit. There we are. To there a bit. It's the hourly chart. Should go back to the 4 hour. Too aggressive, but we'll make at least another 20 plus pips on that. As we're now with stop losses now under the key 137. So 137 has been breached. Weaker dollar continues this week. And you can see we went low, and so far today we've been as low as 136.65. Come up a bit in the last hour or two, 136.80. So 15 pip rise for dollar CAD from its low of the day. But if we look sideways and look how, that's the low. That's what we're looking for, aren't we? If we go up to the daily time frame, you can see the last time we were down at today's low, or been trading at today's low, was all the way back there on the 25th of July. So what's that? July, August, September, October, November, December. Oh, look, it's the 25th of July. Is that a coincidence? Who knows? But we're at a 5-month low for the dollar CAD. For the loonie is at a 5-month high against its southern neighbour, the mighty greenback. So that trend, as you can see there on the daily time frame, is very set, very much in the under half of the Bollinger Band, under the 20-day moving average. Big move down, huge move down there on the 5th. Consolidated for a week or so, and then leg down there on the day we got short on Monday. Further weakness yesterday, significant weakness yesterday, and then down again today. Will we see a wrap up on close of the markets? Canada is closed. I think Canada is closed on Friday. The US isn't. So I'll double check that. But anyway, the trend remains to the downside, and we're very much in the money on that trade as well. Euro we've done. Aussie we've done because we did Aussie, didn't we? Yeah, because it's a live trade. Sterling 135.72, continuing to accrue just like the other dollar crosses. Big day Monday, long again yesterday, big fat candle. I haven't hit my sterling position. Cable trade on an end of day didn't trigger last night, so on the 22nd, like the others. But that's life. And there's that 134.50 zone we talked about last week. I talked about before last week, didn't we? There's a pivot area and a resistance area. We just sort of burst through. We stalled at it on Monday's close, but just took off yesterday. So sterling very well bid. Outside of the Bollinger Band there on the daily candle, which is interesting. See what happened last time? Big candle up, retracement, and then another candle up. So the trend is still to the upside. Look to the left. Where's the next resistance? Well, we're sort of at it now, aren't we, through here? Next level would take us to 135.50 or 135.70. And then you look further out, and that then becomes a zone there at 136.50 through here, and that intraday high coincides with this end of day high at 137.40 area here and here. So that's the upside range, but we've moved quite significantly higher, been overbought here, and the stochastics come down again and possibly moving high. So the story, as we keep saying, weaker dollar continues. Kiwi 58.40 this morning, again similar daily candle, bang back through 58 very significantly yesterday. That was the big move yesterday, having looked like we were going to go it was going to drift lower, this, didn't it? last week. But again, you can see how weak the down candles were, the small bodied candles, big engulfing candle on Monday, taking out all of that previous action. So Monday took out Friday, Thursday, Wednesday, Tuesday, Monday last week, Friday the previous week, where we were above 58, big engulfing candle on Monday, taking out all of last week's action. And then we followed through with more buyers yesterday, and just we didn't hesitate at 58. So 58 becomes our support area now. And, bottom of the Bollinger Band now is that 57.20 zone we were talking about last week. But new highs again. And again, if we look to the left, we were last over 58 back here beginning of October. We were last as being as high as we were today for the Kiwi at 58.50, all the way back there in the second, third, fourth week of September. So we got October, November, December, 3-month high for the Kiwi. So pick your currency, and the dollar is weaker against it of the majors. And finally, the Swiss franc. I keep saying this all the time. A really, really good year for the Swiss franc against the dollar. Again, broken out as we were sessioning this last time. Breaking out of these support areas, what looked like triple bottom here. These were intraday spikes following the big daily spikes down here on the 16th of September. So this was 16th, 17th of October. This was the following month, the middle of November this time. The middle of December looked like we were holding up, but here we are, the 22nd, and big down day yesterday in particular through 7.79. And we're at 78.80 at the moment. And again, below my really badly drawn blobs here. So you look to these 2 days here, 16th, 17th of September, where we closed at 78.50 to the downside. So the good year that the Swiss franc has had against the dollar is picking up again as we come into the final few trading days, the final week of trading for 2025 as well. So if we just there we go, zoom that in, we go back to the beginning of 2025. We were up here at 91, and we're down now at 78.75. So a big move down for the Swiss, for the dollar against the much in demand Swiss franc in these torrid times. Obviously getting a bit of a lift from the bid on gold, I would argue as well. But so story we've been talking about for weeks really hasn't changed. Expectation of a more dovish Fed in 2026 is adding to the pressure. We need to find a new level for the dollar. Is it here? We don't know. It's too early to say. It looks like there's perhaps bidding here. So again, that's a great sign. Potentially, if we go up to the weekly, I'm just choosing Swiss franc as an example. Sideways, very much sideways action. So waiting, see how the new year starts. If this is a floor to take us higher, or is this a consolidation zone before we leg even lower to the downside? You see we've had a triple top, sort of double bottom, and then a break through that, and then a leg lower. So is this the low we needed to get to? Are we going to see some buys for the dollar against the Swiss franc as we start 2026? But more on that next week as we go through this on the higher time frame. So as far as today's concerned, let me just go back to the hourly here and using the Swiss as an example. Down, move up now, some buys at the 12 o'clock candle, but is it going to be sustained? And you see on the hourly, so we are down. We've done, we did gold, didn't we? Crypto continues to unwind. I don't know if you saw, I shared something on my Discord group I found this morning on Discord group, or the trade chat, which was really interesting about the options market. Somebody had shared it on the options market. Let me see if I can bring it up, see if I can explain what this guy was saying. These are levels. He talks about gamma. That's to do with the options. When you're trading options, it's to do with the difference between the put and the put and the call rates and what the where the sort of maths works out. But anyway, in simple terms, basically, he's saying come after the 26th, which is Friday. Remember, the US market is open on Friday. The options market, there's a lot of positions, options expiring. Remember what options are? They expire either in the money or out the money or worthless, and way, way away from where the price is. So when you're trading options, you look at your buying time basically, and the time erodes to the options expiring. Anyway, if you want more on trading options, ask me offline and we'll talk about it. We're going to explain a bit more, but it's a whole different trading game, but higher risk, and it's some real cash. But as you can see, basically in short terms, he's basically saying this, which we can see from our charts, can't we? Key resistance at 90 or 92 is the one I've called out. He's thought it is 95. This is 90. And there's a massive expiry of options around the 85. So we could collapse further after the 26th, or we may see that is the floor is in. So there's been a lot of chatter about some of the big whales looking to buy around in the retail market, but the options market is still quite short, as you can see here, of Bitcoin in particular. So let's see what happens after Friday. So it could be quite a spooky weekend, 27th, 28th, and into the cash market reopening in Europe on the 29th. Let's see what that looks like over the weekend. So forewarned is forearmed, so just watch that. We could have some significant volatility Saturday, Sunday, and Monday in the Bitcoin market, looking at what the options market is doing. This is just one analyst. It's one interpretation of what's going on, but you can't really argue with these price levels and his gamma overlay there. So anyway, there you go. That's something for free I found this morning for you. Another interesting article I'd shared this morning was this oil gold conversion ratio. It's at its lowest level. It's 60-year extreme. I hope you can see that. I don't know if I can zoom that up. Can I zoom that up? Oh, I can indeed. It's a bit too much though, isn't it? Can I just zoom it a little bit? Oh, it's not letting me zoom in. It's not letting me roll with it more. Copy that. Anyway, let's just leave it there. Hope you can read that, guys. Oil to gold ratio hits low record of 50 grams per barrel, basically. So basically, you can see a gram of gold per barrel. A barrel of oil now buys barely half a gram of gold, 50 cents below the long-term average. The long-term average is up here. So 51. Last time we were down here at 61 was back in the 1970s, and I remember the debacle of the 1970s oil crisis when Saudi Arabia, in particularly, and the wider Arab world decided they wanted more money for their oil that the West was demanding, and they quadrupled prices virtually overnight. So as you can see. This is something's got to give. Either the price of gold's got to come down, obviously record highs again at $4,500, or the price of oil has got to go up. Something's got to give, as he's written here. Either oil is too cheap or gold is too expensive, or both. In past cycles, normalization came through rising energy prices, falling gold prices, or a mix of the two. Today, the backdrop is different. Deglobalization, underinvestment in energy, fiscal dominance, and central banks quietly rebuilding gold reserves. Not just central banks either, remember, it's key government as well, not necessarily through their central banks either. There's other people buying gold, particularly some of the developing economies as well. This chart suggests markets are pricing far more monetary stress than growth optimism. Ecobis is where it's come from. So again, something for nothing, my friends, but yeah, it's these extremes don't last forever. As you can see here, this is the 2000, zoom in again, 2008 global crisis came back within a year. The Iranian Revolution in 79, the Arab oil embargo, all caused spikes. So is there another, a black swan event of 2026 coming? But as we can see, the pandemic took us low and then high again. But this is, unsubstantiated 60-year low at 21 at 51. And it's all, remember that spike? It was a very short-term spike, wasn't it, in the price of oil when it went down to $21. See how the change, or if there is any government changes, the change in the war scenario for 2026. Many are saying that we will see some sort of settlement in 26, particularly with the Ukraine-Russia situation. Can't go on forever, but it's still a very long winter to get through for the poor people of Ukraine, and indeed, the poor people of Russia as well, for that matter. So there we go. Again, another, what I found interesting point. So someone's got to give. Eventually it will, but trying to time it or get it is always a black art, my friends, and don't try it. So yeah, dollar down, crypto is what we were going to get to, weren't we? I was talking on before we got to it, but yeah, so the 85 key level, and here we are, 87,200 today. So the daily, sorry, it's got the daily still, is, as we just saw on that chart, still going sideways. This big 85 level, as I just said, there's options expiring on significant volume of options expiring on Friday. 85 and 80, that can't rule out that intraday spike down for us retail traders here. And 90 and 92, the top, so 92 and 95. So nothing's changed there, other than the volumes dropped, or look, the volatility has dropped off this week quite significantly. So waiting for Friday potentially. So keep your eyes peeled, my friends, on Bitcoin, but crypto remains pressured. The oil market continues to recover. Yesterday's key break, as we were talking about it yesterday, hit WTI over its 20-day moving average for the first time in a long time. So it's recovered quite significantly, and it's held it. Interestingly, we closed at highs yesterday, which is always interesting and potentially quite significant. So yesterday's close was the high of the day. We drifted a bit in Asian trade, but we tested higher again. So our daily high at the moment today has been 58.85. We're still half an hour before the US market opens. Actually, the futures markets will be, the futures market is obviously trading already, but the cash market is only up for half a day, but it's 30 minutes away from that. So oil, the trend has been up this week, having drifted or moved down significantly over the last few weeks. So we're a bit higher for oil. And indices, let's just go through those. Yesterday we had a bounce. We were up 31 points on the S&P 500, 6,909. The Nasdaq was up 0.37 of 1%, and the Dow 0.16 of 1%, following that GDP data yesterday. As I say, we took our gold trade was stopped out, and we took another. What do we say? 1, 2, 3, 4, 5, 6, 7. 7 forex trades last night. So let's just go through them. So as we're on the indexes, we have got skin in the game again. So yesterday, Nasdaq, we went long. Not yesterday, on the 22nd, we went long. Our stop loss is there, 25,244. We were long at 25,456, and we're currently trading at 25,595. So 100 points to the good so far on that Nasdaq trade from Monday night. It was Monday night or Tuesday night. Anyway, we were long. That's where we were filled. I think that's in the wrong place. I think it was over here, wasn't it? Close the 20th. Anyway, we're in the money. That's the important thing when we got in. It doesn't matter when we got in. We was where our stop losses is the key thing. So Nasdaq in the money. The DAX is back in the money again. It was it all taken on the same night. It was the end of the 20. Was it on the show? I think I put it on the daily. That's why. But anyway, beating myself up unnecessary. So our entry was here at 24,284. Stop loss is still down there at 24,066. And there's no target set on this one either, but it's also, you can see it's above our entry, it's in the money. As I said to you yesterday, we may close these out to wrap up the December account from an accounting point of view, a reporting point of view for you guys, so you can't say I'm hiding anything. The S&P 500 was also long and also in the money from the 22nd. And that was it, wasn't it? It's just, yeah. So DAX, the NASDAQ, and the S&P. The Dow, we haven't got any skin in the game, but as you can see, markets, the Santa rally is sort of back in play. It's got the daily. Let's use the S&P as an example. There's that down leg that's being bought back now. So that's in play because it was the 1.61 extension. The fib extension takes us to over 7,177 from that leg down. So let's see if we get through 7,000. Not necessarily anytime soon, but as we go into January, who knows? But an interesting level. So a strong week. Having looked like we were moving down last week, we've recovered. The gap on Monday's open was the key thing. Sorry, yeah, it was Monday, wasn't it? We went long. That's right, Monday the 22nd. And a good day yesterday, as I said, and new all-time highs potentially before Christmas. Only half-day trading today. It's usually positive on the 24th, but as we've had such a positive run, 1, 2, 3, 4, 5 positive days, we may see some profit taking. But remember, it's only one day out for the Americans for Christmas, so that all-time high is very much in the crosshairs. Currently, futures trading at 6,910, so 6,900 on the important S&P 500. Remember, the S&P 500, the most important stock market in the world. Oh, Slash, hello, my friend. How are you doing? Merry Christmas to you as well. Yes, most of the markets will be open on Friday as normal because they're US markets, but the liquidity will be low because Europe's not open. Remember, London is closed on Friday. It's Boxing Day. It's a full bank holiday. Europe's closed. Australia's closed. So Japan's obviously open. Hong Kong will be open. China will be open. Obviously, as normal trading day, both Thursday and Friday. Obviously, reduced liquidity means potentially wider spreads. Less players in the market, some squiffy moves, slippages, all that sort of stuff. So just be careful, basically. Slash. I was talking to a big heavy metal fan yesterday. Actually, he had a Motorhead jacket on, Motorhead Christmas sweatshirt on, and on the back of it, it said "Merry effing Christmas" to us all. So that's Lemmy for you. But I'm assuming you're a heavy metal fan with your handle Slash, but perhaps not. Anyway, Merry Christmas to you, my friend, as well. And Vinay, Merry Christmas to you as well, my friend, and good afternoon to you. If there's anything you want to look at, guys, any particular asset, any particular setup, let me know. We can have a look at it. But yeah, stocks remain bid. Dollar remains pressured. Gold's at all-time highs again, over 4,500. And as we've been saying all week, silver has gone higher again. So not only bursting through $70 yesterday, really strong day again yesterday. We're at 71. So all-time highs for silver, all-time highs for gold, again, over 4,500. We saw earlier today, 4,525. If I could put platinum, copper, and palladium on here, platinum's up at an 18-year high as well. Copper's really, really well bet. It went over $12,000 a ton yesterday. So commodities on an absolute burst to the upside. There was something else. I was a screenshot. I'll show you it next week actually about the sectors that have performed for 2025. I haven't actually got it on this workstation at the moment. But anyway, so the story we've been talking about for the last weeks or so is still in place. Stocks are bid, dollars under pressure, and commodities are going gangbuster. And wait and see where Bitcoin goes, particularly after the 26th and this major options expiry. Nothing may happen, but wait and see always. So for that, I'll wish you, those of you that are celebrating with us Christians tomorrow, I wish you a merry and safe Christmas with your family and your friends. And as ever, may the pips be with you. Always manage your risk when you're trading. That's the most important thing I can express to you. I'll update some of the other trades. I said there's a lot. I won't bore you with all the other forex trades, but basically we are long. Let's just run through it here. We're long Aussie CAD, Aussie dollar, a position and a half, a full position on the euro, and Kiwi CAD is also long. I am short euro New Zealand and sterling Oz. And when we looked last, they were all sort of in the money. Let's have a look at some of those other crosses before we go. I haven't said that. So Kiwi CAD was the other one. So let's have a look at these. And I'll wrap it up for Christmas Eve. Unless you guys want to have a look at something else, Slash or Bingo, let me know. So Kiwi CAD was short last night. That's just about, sorry, is that short or long? Kiwi CAD was long. There we are, target. I have marked it on here. Are we in the money? No, we're out. We're a little bit out of the money at the moment, but there's my levels on Kiwi CAD. So that's a little bit out of the money. Euro New Zealand was the other one. So that was euro. Let's put it in here. And here you're saying, well, with MT4, you could have had all these charts on one screen. You're absolutely right. You could have done. But anyway, trade locker is what we've got. Key Euro New Zealand, we are short. Came within a smidge of target this morning, and it's come back to entry, basically. But there you go. It's an end of day one, so I'm going to leave that one for now. How close to the... Oh, that wasn't that close, was it? That was 7 o'clock. I didn't check these this morning. But we got in up here at 202.85, and our target... not on the time, stop loss. Target... No, we didn't get in there. 201.91, and the target is 201.51 or 50 or 6 is where that target is there. So, yeah, that's gone nowhere, has it? This afternoon, as you might expect, Euro New Zealand, who's playing with that. Not many people. And Sterling Oz, always one that can sort of burn your eyebrows because the number of pips it can move is pretty scary sometimes. So pound Oz, and we are short that one from last night as well. And that has actually hit target. So that hit target this morning at 201.228. And it's bounced back. So there's a stop loss. Let's pull the stop loss down to at least the entry. Sorry, it's Christmas. Let's pull it down a bit more. So I'll just make that as our stop loss. So there we go. So one of those from last night is already hit target. So that's in the money. There's a bit flat, aren't there, I think. And Aussie CAD was the other one that we didn't look at, but that's from last night. Aussie CAD. The others were the majors we have looked at. So Aussie CAD finally. Of the 12 and a half, so I've got positions I've got open at the moment, which is a bit twitchy. I had marked on the entry where we got in there. There's the entry. So I wonder if it's got to target. So 191.67. So no, it wouldn't. It would have been at least. Let me check what the Aussie CAD target was. Bear with me a second, and I'll leave you in peace, my friends. Aussie CAD. Aussie CAD from last night was I'm looking for 60 pips, 18.54. 18. Hang on, that's the wrong. That's euro, you knobhead. Aussie CAD 92.08 is the target, so it was shy of. Let me just put that in while we're here. Change that to. Just bear with me a second. Change that to lime green on here. And it was 90. What did we say? It was 92.08.920. 92.08. So we didn't get as close as I thought we'd got in on that. So can you hear my wife shouting about the sellotape downstairs? Can you pick that up on the microphone? I think some might have finished. It happens when you work in the home office. So that's the target. That's our entry. And the stop loss is 91.21, or it was last night. Down here somewhere, let's mark it on probably 91.21. So it looks a long way away, doesn't it, on these hourly charts? Okay. Hour hourly chart. There we are. So yeah, let's pull that up a bit. There we are. It's there now. 91.42. And the close of yesterday. But we're back to where we were. So let's go another one that's not going anywhere. Stop loss 23rd 12. There we are. So remember backspace. Okay. Trade. T1 23rd. There we go. So there we are. All skin in the game. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 9 full positions and 2 half positions as we go into the US Open for the 24th of December. So take care, everyone. I will see you on Friday. Have a great Christmas if you're celebrating. Anything anybody wants to know, let me know. Okay, take care, everyone. See you soon on Friday. Peace be with you, as they say. All the best.